All right, so let's talk about this article here. I thought it was a really interesting article. I sent it out in my newsletter last week to all of my clients, and it came out last week, July 7th, published by Forbes Advisor. And it's their housing market predictions for 2023, titled When Will Home Prices Be Affordable Again? So let's break it down. We're going to dive into this a little here. So talking about summer temperatures heating up, but looks like a tepid season ahead for the housing market. So let's see. Now, this is talking about the market nationally. Obviously, my perspective is going to be on a smaller scale, specifically talking about the Southwest Florida market where we service versus the entire US. So we'll see how it compares in their, what my opinion is versus their opinion, and how Southwest Florida relative to the national trends. So they're talking about the biggest determining factor in why they feel like the housing market is not going to be great the rest of the year is primarily because of interest rates. National average 30-year fixed mortgage rate decreased by 8 basis points in June, but went back up to 6.81 in the first week of July. Also explaining a basis point is 1/100th of 1 percentage point. So 8 basis point is 8/100ths of 1%. So that's the difference between, if it ticked back up to 681, that means it was 678, 6.78. So not a huge difference in swing. Meanwhile, existing home sales remain relatively flat in May, rising 0.2% according to NAR, the National Association of Realtors. Though the median existing home sale price edged lower year over year for the 4th consecutive month, which they're saying is a promising sign for home shoppers. And because prices have gone up drastically over the last, 3 years or so, definitely, I mean, for buyers, it is nice to see any kind of price decrease for sure. Not so great for sellers, but, it's what's good for one is not always good for the other, typically. And affordability is tough right now for most people. So despite high rates, the market remains as competitive as ever, thanks to strong demand coupled with tight inventory. So yes, all accurate. Even though the mortgage interest rates are high, it is a competitive market in terms of buyers because there is low inventory, due in part to those who purchased homes in recent years at record low interest rates staying put. This is what I've been saying, because people are mostly locked in. Especially if you bought a home anytime from really like mid 2020 through early 2022, you're locked in typically under 4%. A lot of people in the 2.5 to 3.5% interest rate. And when you have an interest rate like that, especially if you bought early in that time period and then prices have gone up drastically, it makes it really tough to make a move. If you own a home that you have a mortgage on and you want to go buy another home, even if you want to buy the exact same home, you're talking, if you're at a 3% interest rate and you bought the home for $300,000 and then you go to now let's call it a 6.75 or even a 7% interest rate today on the same home that now costs $400,000, your mortgage payment is going to be massively different. So it's really, really tough. And that's if you're going to the same home. Now, if you started out and you bought your home early on in your like household development phase of, single or married, but no kids yet, and now you've got kids and now you need to upgrade to a bigger home, it's really, really tough for a lot of people, basically impossible at this point. Because how do you justify your $300,000 home? Yes, maybe it's worth $400,000 now, but the new house that you want to buy was $400,000 back when you bought yours, and now it's $550,000. So it's gone up $150,000. Yours has only gone up $100,000. So now you've added an extra $50,000 gap to cover, plus double the interest rate, if not more. So super, super hard to do. And even people that are trying to downsize, let's say your kids moved out. You had kids when you bought your home, you bought a big house, younger kids, teenagers, whatever, and now they're going off to college, and now you want to downsize. Well, even then, let's say you had you bought the home and it was $300,000, And now it's gone up to 400,000, and the house you're trying to now buy costs 450, but it's a smaller home, so it's more expensive than what your home's worth, or even maybe less expensive, even if it's worth 300,000. You're trying to downsize that, but your interest rate's higher, so your mortgage payment is the same or maybe even still higher for a smaller home. And it's really hard to justify that type of switch. So likely not going to happen. And so that's what they're talking about, is that people are really rate locked. But it's somewhere in the ballpark of like 85 to 90, 91% of people are locked in at a mortgage rate under 6% right now. And a little over 80% of people are under 5%. So when you have a mortgage in that range, it's really tough to justify going into a higher mortgage rate. Even if the home's less expensive, a lot of times you're going to end up with a higher mortgage payment for a less expensive home, which doesn't make sense to most people. So totally agree with that. People are rate locked, which is causing the continued strain on inventory. So looking at the forecast for July, I don't think it's going to change much. It's going to be tough. But one of the things that I want to show you guys is most of what they're comparing is 2022's numbers to 2023's numbers. And what a lot of people and a lot of economists and a lot of people making these projections and throwing these stats, when you see these stats of, oh, the housing market's down 20% year over year, what most people aren't recognizing is 2021 was an absolutely insane year, at least in our area and pretty much worldwide, really, in terms of closed sales volume. So I pulled up this, and we cover a number of different areas. So I'm going to show you real quickly year over year change in closed sales. So we'll start in Naples, which is the furthest south market area that we cover. So I went back 2018, 2019 through 2022, because that's the latest full year stats that we can get. And I'm going to switch and show you monthly as well. But if you look at this, 2018, 10,500 total sales, all different property types. So that's vacant land, single family homes, townhouses, condos, everything. Total in 2018, 10,541 sales. 2019, 11,241. 2020, 13,500. 2021, 17,400. So you're talking 60+% increase in 3 years in sales volume. That is ridiculously insane. This is more of a consistent trend. 10,500 to 11,200. Even this is a big jump. And then we come over here to 2022, which early 2022 started out super nuts, just like 2021 did the whole year. Like January through April was crazy. And you'll see that in the month over month numbers. Super, super busy, tons of deals happening. But in April of 2022 is when the Fed started increasing interest rates to curb inflation. That's when inflation took off in early, like end of 2021, early 2022. Inflation took off. The Fed started getting involved in increasing interest rates. And so they did that, and it immediately put a major hit on real estate sales. But when we say a major hit, look, 2022 finished at 11,182. That's still above 2018 and almost identical to 2019. It's like 60 homes, 60 properties less in Naples. When we look at Cape Coral and Fort Myers, that's kind of the middle area of our territory. Let's look at this. What do we see? 20,677, 21,400, 23,700, almost 30, 28,500, and then we're back down to 21,500. Where's 21,500? Above 2019's numbers a little bit, not by much, but about 100 units above. Let's look. Punta Gorda is the next step north. 6,000, 62, 69, 82, back down to 64, still above 2019's numbers, just a little. Northport, Sarasota, Same trend. 2022 or 22,000, 23, 25, almost 30,000 units, 30,000 properties sold. Northport, Sarasota, Bradenton area. Back down to 22.7, just under 2019's numbers. So what we're seeing is a shift back to the pre-insanity. The market's not crashing. We keep having people come to us and say, oh, I'm waiting for the market to crash. The market's going to crash. The market's going to crash. The market's crashing. Oh, it's crashing. It's crashing. There's a, recession and blah, blah, blah. Mild recession does not equal market crash. And if you go back historically and look at recessions, most recessions do not cause real estate prices to drop. They tend to cause real estate prices actually to go up. So those that think that a recession, if it happens, or if it's happening, I mean, it's very mild if you even consider it happening. It all depends on who you ask, and primarily it has to do with politics, and I'm not getting into it. Whatever. You believe what you want to believe, but at the end of the day, the real estate market is not crashing, at least not in Southwest Florida. We are reverting back to pre-pandemic numbers. That's all. Is it going down a little bit? Prices, maybe, depending on what it is. I mean, we still got properties that we're seeing multiple offers on. It just depends on what we're talking about. All right, so let's look month over month now. And I'm going to use 2019 because 2018 kind of just floats into it. So on January 2019, and then we're going to go all the way through the most recent numbers that we have right now, which is May of 2023. June's numbers aren't out yet. They don't come out till typically like the last week of July. All right. So now let me switch back. We'll start south again. Whoops. Naples area. And look, January 2019, and this always happens. January and February almost always historically have been pretty low numbers. Because if you think about it, the way the real estate market works, typically what goes under contract doesn't close for between 30 and 60 days. So what you're seeing for January closings is stuff that went under contract typically in November. Well, what do you have? November, December, you got the holidays. So January and February are almost always our lowest closing months. Sometimes December is lower, but they're typically January and February typically our lowest closing months. And then it jumps up like March, April, May, because those are the people buying houses in January, February, March, and April, which is when our population virtually doubles in Southwest Florida because the snowbirds come in, and inventory also typically goes up during that time because people know that more people are here and looking at houses. So January 2019 in the Naples area, 650, 670, 1,086, 13, 1293. So now let's look. January of 2023, 610. Where was this? 648. 669 was February. We're at 760. March, 1160. March, 1,086. 1305. Now, April's a little low. May's a little lower. But there's not that far off. You're talking in the, 10, maybe 20% drop in the March and April, or April and May, but the January, February, March, they're actually higher currently. So we're running about the same. 2023 so far, the first few months of 2023 is very, very similar numbers to 2019's total numbers. So that's Naples. Now we look at Fort Myers, Cape Coral, 1184 compared to 1265, so higher. 1439 in February, 1563, higher. 1968, 2180, 2012. So now, again, April and May, a little bit lower, but January, February, March, all higher. When you total them all up, they're very, very similar. So basically, all we're doing is reverting back to the 2019 numbers. We just got rid of the craziness that happened during the pandemic. And I think if there's one thing that everybody can agree on, because it feels like there's not much that people agree on right now, one thing we can agree on is that the real estate market was nuts during the pandemic. So 2020 through 2022, everybody pretty much thinks everybody was crazy. And the real estate market was definitely crazy. Now, if honestly, though, if you look at it, like, look, here's all of 2020, 2019, 2020's numbers. It's not really a ridiculous spike. Even in 2020, it felt crazy. But the reason it felt crazy was because we were slammed with multiple offers. And it was higher. I mean, you look at November, December, like these numbers are higher than November, December 2019's numbers were. You see, November, December, they were down here like 1,500, 1,900, January 1,450, and then here they're up, almost 1,000 units higher. So this is crazy. April, we're way up there, and then drop back down a little bit. We had a little dip right here in early, the January, February 2022 range, but still look at January 2022, 1,600 versus 1,100. I mean, you're talking, 40% more homes sold. So it was nuts in here. So all we're doing is reverting back to a traditional, what we have historically seen. And we're probably going to see pretty flat versus 2019, or maybe a tiny uptick. So here's Punta Gorda, 330, 462. Look, 328, 2 units less than 2019. 381, that's higher. Wait, no, it's not. That's lower. And Punta Gorda is the one that has been steadily lower. That's right. Punta Gorda, Port Charlotte market area has been steadily a little bit lower than what it was in 2019. And that's the one where we've seen the biggest drops. And that's the area where we've seen some price decreases. So let's look at Northport, Sarasota, Bradenton. Again, 1198 January, 1220. Very similar. 1564, 1607. Big jump in March, 2372, 2162, 2233, 2155. May, 2476. 25. So again, right there. And actually 2023's the first 5 months of 2023. If you total these up in Northport, Sarasota, Bradenton, you're actually a little bit higher than 2019's numbers. And that shows in that they have had the most price increase from 2019 to 2023. And the numbers are trending higher in the Sarasota, Bradenton, Northport area, where the rest of them, the prices are trending a tad bit down. Punta Gorda, Port Charlotte, a little bit more. They were running about a 4% decrease in price, where everybody else is running basically flat. Sarasota is like a 2% increase. So what I'm seeing is what the actual numbers play out to show is, yes, if you're comparing to 2021, 2022, yes, we're going to be down a little bit, but the market is not crashing. We do need more inventory, and that's what they're saying. So they're talking housing market activity remains weak overall. I don't think it's weak. Is it weaker than 2021 and 2022? Sure. Is it weak? No, it's not weak. And this is what I'm hearing from most of my fellow agents that I network with across the country is they're trying to get headlines. The news is trying to get headlines. They're trying to scare people with, oh, the market's crashing, blah, blah, blah. But that's not the reality. The reality is the market's pretty much flat compared to pre-pandemic numbers. Throw those numbers out and you're pretty well flat, which is why prices are not dropping like you would expect with a housing market crash. Yes, there's some concern still about inflation, potentially recession, like we talked about. Interest rates are going to stay up there. The projections that I've seen, maybe they'll go down a little bit by the end of the year, probably not drastically. But I mean, according to what the Fed's saying, the reality is probably not going to go down, because they're talking about by the end of the year having the Fed rate up to as much as 5.6. Right now it's floating between 5 and 5.25. So that means that they do expect to hike rates again. Now, will that affect mortgage rates? Maybe, probably a little bit, but not likely drastically, because the mortgage companies factor all their expectations in ahead of time. So typically what you see is like a month or two before the Fed meets, if they're expected to do a rate hike, mortgage rates go up in advance. If they're expected to stay flat or go down, or maybe they get a surprise like, oh, we think it's going to go up, and then they decide to leave it the same, well, then you'll see them float back down right afterwards. They'll go down a little bit. So Fed Chairman Jerome Powell testified to Congress that their process that they have built out to get inflation down to its 2% target still has a long way to go. So they got work they're doing. Nothing that we can do about that or control on that, except for don't spend your money. All right, so they're talking about a sluggish housing market recovery. I don't know what we're recovering from, honestly. I don't see it. So they're talking about mortgages. Oh, here's where I was talking about. 91% of borrowers with mortgage rates below 6%, 82% sitting on rates below 5%, according to Redfin. So because of that, mortgage applications are not likely to, an uptick in them is not likely to happen. They're about 20% lower than year ago levels, which coincides with roughly a 20% drop versus year ago numbers. But again, a 20% drop only is bringing us back to the 2019 numbers, which is realistically where we should have been anyways. We just had a couple years worth of craziness because of the pandemic and everything that was going on. And then, you know, all the governments worldwide pumping money into the economy to help businesses and people stay afloat while they couldn't work and business wasn't happening and things like that. And so there was a lot of craziness. But because of the continued low inventory, we're not seeing prices crash. We're not seeing prices drop 20%, even though sales have dropped roughly 20% from that time. So they're talking about mortgage originations amounted to only $344 billion in the first quarter of 2023, lowest total since the second quarter of 2014. Okay. But home sales did record a nominal gain of 0.2% from April to May. They're down 20.4% from a year ago, like we said. So April to May, though, they went up 0.2% nationwide. All right. So we're going to stop here and we will jump into another video. We're going to talk about inventory outlook for July and moving forward. We're going to talk about this next section of the article here. So if you want to see that, jump in, take a look at the next one. We're going to post that next week, because this is relevant through the end of the year. So not something super urgent, but we're going to post another one next week and talk a little bit further and see how we could potentially get some more inventory, help provide more options for people and where we can look for those options. So if you want to hear about that, check out the next one.